Hello traders, the title of the video is Swiss franc Japanese yen, keeping FX technical analysis working harder for you. Alright, so do you want the FX technical analysis to work harder for you? Alright, are you looking for trading strategy, FX trading strategy that can work harder for you? Okay, let's get started. So I have something very simple here. So without too much blah blah blah, what are we looking for? All right. If a financial instrument goes up from point A to point B, and then it came down 1, 2, 3, 4, 5 move down. All right. Now traders that are area way traders, traders that are advanced traders already know this. But the reason why I'm recording this video is to show other ordinary traders that do not know anything about the price structure. And I will try to simplify it and show traders another simple way, okay, to find excellent, okay, trading setup. That's what I'm doing here. Even if you already know about the price structure, I encourage you to watch the full length of the tutorial and see whether what I'm saying here will help you also, okay? So price goes up from point A to point B, came down 1, 2, 3, 5, move down. If the common central line right here along this move down is broken, all right, and the price start going up, the first resistance level that we must watch is the 50% Fibonacci retracement level, or this move from here to here. I'm not going to repeat myself in this video. That's it. So as you can see, the price went up, as I told you, from here to here. This is the Swiss franc Japanese yen currency pair, went up big time, okay. And now, as it's coming down, if you look carefully here, it came down in 5 moves. 1, can you count? Yes, you can. 2, 3, 4, 5. That's what we are talking about. Now, what are we looking for? If the common central line along the price is broken here, and the price start going up, and we receive an invitation to buy, and we buy here, try to put it a bit closer, all right? We buy here after this currency bar is closed, all right? And we buy after this currency bar is closed using a top-down trading method. If the price going up, we'll watch the 50% Fibonacci retracement level of the move from here to here. Did you get that? I have not yet finished. So this is exactly what the professional did here. Boom, boom, boom. The 50% Fibonacci retracement level of the move from here to here is the peak line there. That's where we are now. So what are they expecting again now? Now they're expecting the price to come down to the 61.8% Fibonacci retracement of the move from here to here, which is the orange line here. So the 61.8% Fibonacci retracement level of the move from here to here, all right, is the orange line. Now, I have a warning to a lot of traders out there, is that the price does not have to stop here. Sometime it will break a bone and run away. And you'll be saying, George, what were you talking about? So if the price reaches that 50% level, we wait again. You see, there's a common trend line here, must be broken, and then we implement a different time frame trading method to control the risk. As one trader has put it to me, it's all down to risk control. He is right. All right. And I'm not saying that definitely the price will come down to 61.8% level. If we receive a sharp signal, it's going down. Our first target is the 61.8% Fibonacci retracement level. You can see that as the price was going down first, he returned that orange line before he even reached the 50% level. So this is it. So before the price even reach the peaks, and we reach the pink line, you will draw that line there. Or all you do care about is to monitor the reaction of the price here. And also, if you are a swing trader, you buy here and reaching this level, or is approaching this level, you are securing your gain. You see, here as it came quite close, some people took profit. Here the price came back down straight away. So if you are not securing or managing your swing trade at time, you see, it come back down again. Or if you did not enter the trade carefully here, all right, if you enter after this long candlestick bar at the top, that's not a good place. If you see a long candlestick bar, you want to look for a pullback near the 50% Fibonacci retracement level of that long candlestick bar. This is the situation here. 50% Fibonacci retracement level of that long candlestick bar. If you see a long candlestick bar, don't buy at the top like that. Be very gentle, expect a pullback, or if you buy at the top, control it gently. Now, the next thing that I want to share with you today, all right, so we talk about 1, 2, 3, 4, 5 move down, and the price going up to the 50% level. If the price is going to the 50% level, and is subdivided into 3 moves as it did here, 1, 2, 3. All right, if the move from here to the 50% level is 1, 2, 3 move, all right, we will expect the price to, from here as it's going down, to come down again in the shape of 1, 2, 3, 4, 5. Am I talking too much? Because I promise not to repeat myself. So 1, 2, 3, 4, 5, 1, 2, 3. Because this one is 1, 2, 3 to the 50% level. If it start coming down, we'll expect it to come down 1, 2, 3, 4, 5 down. So what can you do with that? It means that if it come down here like this, because we are expecting it to count down 1, 2, 3, 4, 5, this is a good thing to know. If you count down 1, you say that's 1. You're expecting the second one. Where will the second one go? Up. So if a common settlement is kaput, you may take advantage of that move out. But because the price is going to go down, you want to sell, isn't it? So you concentrate on the lower high. So yet again, so it came down 1, 2, okay, and then go up, and then down, even to here. So you'll be looking for opportunity to sell here, and also to sell here, if there is a signal to sell. Will the price come down 1, 2, 3, 4, 5? By all means. Sometimes it will do exactly that. Sometimes we just pop it down all the way here. Sometimes it may not do it at all, and the price may find support at the 61.8% level right here, as I tell you, and then just spring up again. So one step at a time, have a good reason. Why am I buying? Why am I selling? Am I just assuming something? All right. The point we are making, we want you to know that structure, which a lot of area we trader already understand, the zigzag pattern, 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5. Sometimes the price may not do that. I know that thing I want to share with you here today, because I consider that you are not a typical area way trader. Is this? Are you still there? Okay, good. All right. As you can see, it came down 1, 2, 3. All right, we hit that level. It's getting a bit weak here. We'll monitor it. We receive a sell signal. We'll sell it now, one step at a time. 61.8% level, may go back up, and so on and so on. Watch the other key level. So if you break it below that 61.8% level, the next target is the low here in the zone of 10008. Okay, if you break below that, the next target is 85961. How did I get to this target here? 85961. All you need to do, see, you measure the distance from this 1, 2, 3, 4, 5. See that move down from the top, from the high to the low of that price action, and then from here you project it down to the 50% Fibonacci retracement level. So the pink line. So you put it from the pink line downward, because we are expecting A, B, a C, okay, a D, a chart pattern. Our expectation does not mean that this is exactly what the price will do. The price can come down to this level, which is the sweet spot of Fibonacci retracement level, or this bullish move, and form a double bottom chart pattern right there, and which I think is likely to do, and then start going down. So your 1, 2, 3, 4, 5 move down, maybe just one move down, or a funny move down here, where the price will form a double bottom chart pattern. You do not want to ignore it. If you find a support here, and this common settlement is kaput, well, it's going to go up. Use different time frame trading method to buy it. The reason why I'm speaking like this, some traders know, get used to my style. It doesn't bother them. Some traders, it may bother them that I'm going over it again. For those traders, you will get used to me soon, all right? I'm not trying to patronize you or annoy you, repeating the same thing over and over, but I'm taking into consideration other traders that are okay beginners. All right, that's all. Okay, all right. So again, the expectation doesn't mean that the price will do exactly that. The price will do something completely different. So we need to be prepared for it. All right, the different scenarios that can arise. All right, but if our expectation is being fulfilled, therefore we have an edge and we can take advantage of it and cream the market consistently. And again, if there is a change, we will be aware of it straight away that there is a change. And okay, we can play one step at a time because the price always going from one key level to the next key level. In all cases, we will follow the trading drill. I talk about this all the time. The setup, okay, the signal, and the low risk entry point without ignoring, okay, the trading triangle, the market first, the sector before the individual financial instrument. I need to remind the Forex traders that the Swiss franc Japanese yen is positively correlated to the euro-dollar currency pair. So for Forex traders, you are trading the currency pair, you are indirectly trading the euro-dollar. Very often, those two core currency pair will be converging, which means they will be going in the same direction most of the time, but sometimes they will diverge, right, which means euro may go up first and this one will be going down. Sometimes there is what we call a lagging, okay, phenomenon between these two currency pairs. So sometimes you will see this one will give you a signal to sell or will be going down when the euro is going up, and you'll be wondering, George, normally you say that you may see sometimes they may diverge, doing opposite things. When you see that with this one, sometimes it will diverge from the euro, but by the time you know, you see your beautiful sell signal, okay, but the euro is going up, you say, well, this is a sell signal, I'm selling. By the time you know, this one will go back again and align with the euro. So when you see a divergence between this currency pair and the euro, be very, very careful and take it gently. All right, very, very important. All right, so positively correlated to the euro dollar, a leading currency pair. This Swiss franc, Japanese yen is mimicking the euro dollar currency pair. It's a little bit slow, I need to say to traders. So, especially when you are trading currency pair ending with yen, composed of yen, it's quite challenging to trade the yen currency pair. So, for new trader, you may decide to trade completely the euro dollar, which I will recommend to some traders. If you have never traded any currency pair like this one, Swiss franc Japanese yen, you say, George, I never traded it before, don't jump on it, all right, because try to demo trade first. Some currency have a different personality or characteristic behavior, and you may not like it at all right, so play with it and become a specialist of it, okay, and know how that currency pair moves before you even bother to spend your time on it. Otherwise, you may trade it and say, George, you were talking about this and like it, now trading, now I lose money. Next time I see you, okay, I will give you, okay, a big slap, all right. We don't want to get into that, okay. So this is the end of this tutorial, talking about Swiss franc, Japanese yen, keeping FX technical analysis, working harder for you. Is it working harder for you? Okay, let us know in the comment section. To summarize the video, very simple. Price goes up from A to B. If you pull back 1, 2, 3, 4, 5, move down, without coming to the beginning of here, the common statement is put here, expectation may go to the 50% level. Doesn't mean that you will definitely go there. It may go there. Very often, the price will find a resistance there and come down again 1, 2, 3, 4, 5. That's one scenario. The price can break above that 50% level and find a support and continue to go up more. We can't ignore the other scenario, all right? Or the price may find a resistance here, but you may not see another 1, 2, 3, 4, 5 move down. All you can do is to measure the magnitude of the price move 1, 2, 3, 4, 5 move down from the low to the top and project it down below, all right? The 50% level. Your ultimate target is this level here, which I was talking about before, 85961. But there is also a midpoint target. So you will divide the distance from here to here into 2, which will bring you somewhere in a region of 1127, roughly, that zone, corresponding to this low here. And you want to be aware of the midpoint target, where the price can also find a change direction, because those who are selling here may find it so. So follow the price, draw the trend line, and trade on the edge. Two things that the price doing all the time: it will break below one key level or trend line. You see here, it breaks above, okay, breaks above, Okay, it went down, retest. All right, that's what we are looking for. See the red line, okay, the red line. Here it is. This was key level. He braced the boy, and now it came back to retest that red line. So those are the things that you want to look for. The trading setup, the signal, the low risk entry point, without ignoring the economy news. If you are trading Forex, the first week of the month is quite challenging to trade Forex, and you don't want to be doing all kind of things on your own. All right, very, very important. And attention to the economy news, and combine your technical analysis with the economy news. Check the economy news at the Forex Factory, www.forexfactory.com. So this will conclude our discussion today. Swiss franc, Japanese yen, keeping FX technical analysis, working harder for you. Happy trading to you all, and speak to you soon. If you like this video, please give us the thumbs up. If you dislike it, well, let us know by marking it down. If you found it truly an amazing tutorial, feel free to share it on Reddit, on Facebook, on Google+, and also on Twitter. Until the next time, enjoy yourself and be very happy. We are the CHFJPY traders, talking about Swiss franc, Japanese yen, keeping FX technical analysis, working harder for you.